Hey guys, good morning. So we're going to cover the stock charts. We're going to cover trade ideas. We're going to get into it right away. Hit that like button or hit the thumbs down button if you're losing money like I am so far. But that's all right. We'll evaluate the charts. Charts go up, charts go down. Everything changes at one point in time. So we're just going to go ahead and evaluate when we see that. Let's get into, I want to put out this video right now because, if you're a contrarian trader or you're looking for a move to the downside, I think it's the best time to put out a trade when the markets are going up and going against you, not going, for you. And that's, my thought process behind that is if the markets are going to move down, I'd rather give people a head, kind of a head start on anticipating the move rather than just putting out a video after the markets have collapsed a bunch or sold off a bunch and a video like, oh, I told you so. I just don't think there's a whole lot of value in that. So I'd rather put out a video that gives people an opportunity to enter a trade that hasn't yet happened. So that's basically what it is. So far, just disclaimer, I've in this last move up, I've been wrong. I've the market I've been looking for downside. It's been only going up. So that's just a disclaimer. We're not all right all the time, but eventually we'll be right, I believe. So we'll go ahead and look at what the charts are telling us right now. So the SPY. Let's look at the SPY. Here's an hourly chart. Notice the first thing I notice on this hourly chart is the big portion of these moves that we're getting are being made in the gaps overnight. So these are news-induced moves, kind of pump moves, essentially. Moves that we're getting on trade news. I mean, that's really all this. Every single headline that I see is the markets are trading higher on trade optimism. Well, okay. Well, there's not a whole lot of substance to that. I mean, everybody knew, all traders knew, me including, that the Trump administration was going to roll back the tariffs or was going to pull off the trade, ease on the trade rhetoric before the election. I mean, it's just a political move. It doesn't have anything to do with the economy. Ultimately, all it is he wants to ease and get everything all nice and cozy right before the election comes out, so he has a good chance of winning. So we all knew that was part of the risk on taking the downside. We all knew that was going to happen, and as of right now, we're seeing kind of the pump, I think, of that. Markets are gapping higher, but they're really gapping higher and just not doing anything throughout the day. Over the last this entire week, we've just been making our moves in the overnight session, the futures market, gapping higher, and then the markets just like die. They just trade sideways or don't do anything. You can see here's a gap, small move, not much. Here's a gap up, small little fade, not much of a move. Today, gap up, not much. So, and the other thing to notice is it's on low volume. So this entire move, you see the volume. If I scroll out, you'll see the volume is just really low. I mean, we're not getting the kind of volume that you need to see for a confirmation breakout or anything like that. Yes, you can move higher on low volume, but when you break out, you should see an increase in volume. You should see a substantially, a pop in volume on the breakout. Kind of like, I mean, when you go back, you can see it in different areas. I mean, this wasn't really a breakout. This was the tax pump, so that was just kind of on auto drive. But usually, when you see a breakout, you're going to want to see like a pop in volume where everybody's jumping on board, and we haven't seen that yet. That could come. This move up maybe starts to change minds, but as of right now, I think a lot of this move has just been shorts covering trades. And trickle buyers, not heavy buying, but retail buying or whatever, and shorts covering basically. So that's something to notice. Also, the RSI. Let's look at the RSI. That's something to keep an eye on. RSI is sitting right now at 70, almost 71. And if you notice the RSI, the last time we were up around these levels, This was back in the 70 or 70 level, so we're above those levels slightly. Here's a pop up to 74. That was right before this collapse. This price crash down. That was a drop of 6-7%. And then if we go back, we can see we had RSI was up high, up near 71, 72 right here, right before the big crash last in December of 2018. And yet an RSI right here at the very peak of the Trump kind of blow off top back in January of 2018, and that RSI was up around 85. So that was extremely overbought. So you can get more overbought. I mean, overbought is not just by all by itself an indication that that it's going to stop. It just gives you an idea that, okay, we're in the territory, we're in the range where we could get a snapback or a pullback rally, or I'm sorry, a pullback sell-off, some sort of a correction. We're in the ballpark, and that's really all it is. So now it just gives us an idea of kind of, okay, let's start to look for resistance holding, or let's look for a break above resistance, a fake out move, and then fade it, and look for that to chop down. So that's what I see right here. Here's your resistance line. This is the new trend line that I drew out. We have a couple data points, cluster right in here, cluster right in here, and a cluster right here. And today we've broken that. However, day's not over. So that's what I see happening probably today, is this fades and we close back within the resistance. So that would get us back down around 200. And I think that's what's going to happen. I put a high probability. You can see that we're starting to fade. Here's the minute chart on the triple Qs. Here's your ramp higher. Everything seems good, but now all of a sudden, and really this spike right here, I saw this spike and I was like, oh, that's probably the blow off top right there. And so far that has held as the actual high of the day, 201.53 on the Qs. We tried to tag it again. It was like a back test. Now we've started to fade. You can see we're making lower highs and lower lows. So the blue line down here is that trend line, and it doesn't take much to get us back down there. So that's where I see us going. That would be kind of a rejection or an overshoot of the resistance line. Resistance would still hold, and you could potentially look at a short up around resistance. That's it's an option. And I know everything seems like, everything's bullish. It's, markets are going to go up forever. You need to be long. Now is not the time to be buying long. Okay. So if you're not long and you haven't been long already, then now's not the time to be just jumping in long. That's the emotional trade that, I don't think you're really going to want to make. In fact, I think now's the time to be looking at shorting or buying volatility. Volatility's pretty much collapsed, and the market just doesn't get completely complacent. I mean, there's always going to be a negative headline somewhere that pops out of something, and when you're that complacent, you have that low of volatility, protection's cheap or shorting's potentially cheap, and I think that's kind of where the most opportunity lies at this point in time. Previously, obviously, going long was the trade, but as of right now, short I think is the better trade. Let's look at gold. Here's Barrett Gold, and also bullion. I mean, bullion's pretty much at support. So again, gold is in a bull market, even though it feels like it's not in a bull market on a day like today or yesterday or the day before, with the prices falling pretty rapidly. Still, the chart is a bullish chart, longer term. You've got breakouts, you've got flagging action, breakouts, flagging action. We're looking for another breakout. So this is an area of support. We're at support right now in gold bullion, and that's around this trend line here. You can see how that holds up, and that's really all I can say about that. It's a bullish chart longer term, and we're at support. Here's Barrett Gold. This one popped yesterday. I added to it the day before, right here at the low, and we popped higher. But again, I'm not looking to just sell out of my position on a a small pop like that. I'm looking for the next breakout out of this big flag pattern. So when we start to resolve and break out of the flag pattern, I look to sell into that strength, not right here. So I'm continuing to add to my position. I haven't added anything today, but if we come down to this support line around 1617, I'll look to add a little bit more. And we're getting really close to this other support line down here at 1588. So maybe we have a little overshoot where we drop, undershoot, I guess, where you drop down and tag it. That could be a potentially great spot to buy some Barrett Gold. This one I want to point out, MasterCard. We've been short this a couple times, and I was short here on this big drop. I caught that one pretty much perfectly, shorted right here at the very top and caught most of it. I didn't get it all, but I got most of it. and then we popped up, and the interesting thing I noticed is we popped higher, and then just the last couple of days we faded it back down below this resistance line. So that I saw that and I was like, that's interesting. Why did we just recapture that trend line again? And then it looked like we were bear flagging. So this is a breakdown, a bear flag, and then today we've broken up again on the tariff news. But I think this is an overshoot, and so far it looks like it is. So I've actually taken a short position on this overshoot, and we'll just watch it. If it, so far looks like an overshoot and looks like we're going to fade. Let's look at the minute. We're starting to roll over. So this is, I think we're going to come back down and hold under resistance, and that will be bearish, because we'll be below resistance. We'll have done an overshoot and then faded and closed below resistance, and then I look for this thing to sell off again, and probably head down. I've got profit targets down here. First one 255 about. So that's a trade that everybody, it's not too late to get in on that one if you're interested. If it doesn't work out and it wants to, if it just, maybe it holds this resistance right here as support and starts to run higher, just cover your short right here at the top of this candle, which would be right here at 274. If we pop above that, let's say we start 274.10, just cover your short. You have a very small loss. You're right there in the range where a trade could be made, either to the long side or the upside. But it's not a bad trade to take to the short side, and you've got your risk right here. It's very close. So just an idea, not my advice, just my opinion. Here's Apple, pretty much lights out. There's nothing there that is bearish. We've recovered the trend line. Could be a brief overshoot while we chop around up here and then we fail. But as of right now, I'm not touching that one. That's just there's a lot of momentum to the upside on that one. So here's one, PAYX. I've talked about this one in the past. This looks like a good short as well. Here's the reason. We've had this trend line here. We broke above it. This is an hourly chart, broke above it. Not impulsively, though, and just chopped around kind of along that trend line. We've since failed that back below resistance and then had some back test. Here's your back test right here. Back tested it, started to roll over again. We're right near that level. So this is a potential short opportunity as well. You could take the short right in this area, and if we don't, and if we pop back above this resistance line, then you could just cover. So, it's not a bad short trade right here. And if it works, we head down towards first profit target, 78.30, we'll call it. And we'll just follow up on that if that continues to work. So market trend line out. Here's your hourly chart. I'll just keep it there for a second. Everyone can look at that. There's a trade idea. We'll put that out there. And going back to the cues here, yes, basically we had these dragonfly dojis that we've gotten over the last couple days. The dragonfly doji is basically just a potential topping candlestick pattern. And it just shows that the sellers are starting to step in, and the buyers are still holding it up, but the sellers are stepping in, and you end up kind of opening and closing about the same area. But during the day, you have selling come in, and it shows indecision. Usually, what you want to see to confirm that this is a reversal Dragonfly Doji is you want to see follow through on the next candle, which would be today. Well, as of today, we got a big gap up, so it's not going to be a confirmation as of today that this is selling unless this candle, starts to sell off and we close the day substantially lower. So just something to note, reversal patterns, candlesticks, topping patterns, you need to wait for confirmation. So whether we get that or not, it's yet to be seen. You can see here on the 1 minute, they actually spiked us again right here. This is just algos running stops, basically. And that's why they spike it above the day's high. You can see, here's your day's high. People are starting to see this as a potential overshoot. They might short the day's high, and then the algos come in and spike the day's high, running any stops, and then instantly, it sells off right after that, back below the day's high, the previous high. So just something to keep an eye of, that this market is controlled and traded by algos for the most part. So the algos are going to continue to try to run stops while they can. That's the name of the game, is get people to close out their positions. If they are, in a losing trade, they want them to close the positions and realize the loss. So that's just kind of how it is. That's really all I got for the video. We'll go ahead and wrap it up. I hope this content is valuable. Keep an eye on the markets. A potential reversal. We have the setup for a potential reversal any day now, and we're just gonna sit tight and wait for that to happen. So, and that's really it. So take care. Catch you on the next one.